In my travel, when I meet especially the large asset allocators in the world, right, the investor confidence in China is broken, right?
It's broken?
Is broken, absolutely broken.
Really?
Yeah. Okay. I don't see money moving back into China in the near term. To the extent it should, given the large size of the economy.
So then that money you're saying may find its way into India?
It's not may, it is happening in India.
Okay.
Right? If you look at the data for this year as well, India is probably, not probably, 50% of EM flow that has happened in Southeast Asia, 50% of that flow has happened into India. India's, we all know this, 14.1% of MSCI EM is now India. Right? I think that number only continues to expand. And, just recently we had this whole news of JP Morgan, making Indian bonds investable and adding them to the index. That's going to see $25-30 billion of inflow, right? I think the Western world is waking up to the fact that India representation in global asset allocators is underappreciated, right? And I still see pockets of money, not little, but lots, especially in the Western world, where people have been talking about India. Everybody has been waiting for a pullback in India, right? Which we know is not happening, right? And my point is, as this whole confluence of seed spots continues to improve, right? We will see money will come in. That foreign money will be on top of the underlying layer of $35 billion of domestic inflow that we are already seeing. I feel, Surabhi, and I'm happy to go on record saying that between 25 and 27, India will see a super equity bubble cycle.
I don't remember this.
Right? Where when an economy goes from 3.5 to 6-7 trillion, right? Which is what we are going to do in the next 4-5 years, right? We are going to see the maximum gains, benefits made in the equities.
I straight away have to come to now the brass tacks questions. How do you prepare for it? What do you look at? What should portfolios look like? And what should investors do to prepare for this huge boom cycle if it's coming?
So my first answer is that India remains a buying market, right? If you see any opportunities, right, it's going to be a volatile ride. Nothing is one way, right? It is going to be a volatile ride. You need to make sure that now, since we have talked so much macro, that your micro is right. You are sticking to the right management, right? Cash flow generating businesses that are not dependent on high debt, right? And there are umpteen number of companies and businesses and sectors that I'm super bullish on. And I'm happy to lay it out there. Even at Nuvama, we feel that theme is going to play out. Given the domestic consumption play in India, right? We are very oriented toward domestic themes that will play out, right? One is domestic autos, for example. Domestic autos, have been in a benign environment. Sales have started picking up. We remain very, and I'm talking about autos and auto ancillaries both. Right? Cement. India government has announced that they're going to make 1.4 trillion of capex in the next 5 years. Right? The spend on capex in infrastructure is going to be...
real estate, you need cement for everything.
India is in a transformation age which people don't understand. China went through that between 1995 to 2010. India is in a similar phase, right? Where there is capex going to happen. I remain very bullish despite my negative view on interest rates. Okay, I remain very bullish on Indian real estate.
Indian real estate,
right? I think, also I look at cycles. We have had 10 years where, it
was a down cycle,
Absolutely, right? We are just entering that cycle.
Thank you for watching CNBC TV 18 and do follow us on all our social media platforms for news, updates and more.